G'day and welcome back to the Aussie Investing Machine. Thanks for joining me in this episode. Today we'll have a look at the company TAB listed on the ASX. We'll discuss the latest news which has resulted in a near 14% jump in this stock's price. We'll look at the company in detail, have a look at what its future direction might be and whether or not it's a good long-term investment. We'll also do a comparison to some of the other listed bookmakers on the ASX. I've done a recent video which had a look at PointsBet Holdings. You can have a look at that video. I'll put a link up on screen. Without further ado, guys, let's get straight into it. Now, as always, this video is for educational purposes only. Before making any financial investment decisions, please go and see a licensed financial advisor. Now, if you're interested in some of my favorite books about investing, make sure to check out the links in the description below. These books are great for increasing your knowledge about investing and they've really helped me on my investing journey. Now, don't forget to give the video a big thumbs up. If you haven't already, please subscribe to the channel. I'd really appreciate your support. So let's first look at TAB's financials and see how they stack up as a company. So let's dive right into their balance sheet and see what their numbers are looking like. We can see here that their net income after tax has been really inconsistent over the past 5 years. I'll highlight this row here so you can see as of FY 2020, we're looking at negative net income. It was negative about 4 years ago, and then it's been really all over the place since then. Over to their balance sheet and we can see that their total debt has also been increasing. Also on their income statement, we can see their earnings per share has been trending down over the past 5+ years. These are really not great fundamentals for the company, and they're certainly not those of a great growth stock. So let's jump in and have a look at what's happened to the stock price over the past few days. As you can see here, there's been a sharp jump in the stock price over the past couple of days. Looking at the longer term picture, however, we can see that TAB has really fallen off a cliff around the time of the pandemic. Putting in a trend line now, we can see that from 2015, the company really has struggled to grow any significant value in its share price. And if we zoom out even longer term, we can see the stock used to be valued far higher than it currently is. All the way back at the peak of the GFC, we can see the stock was up at $18. And now it is only a fraction of that price at around $4.10. While reading in the newspaper The Australian, we know that a private equity company has expressed some interest in TAB. Now this could be for a component of the company or a takeover of the company as a whole. So why would a private equity company be interested in TAB now that we know their fundamentals are not looking so good? Well, there's a guy mentioned in the article who might form part of these private equity investors who's worth talking about for a little bit. His name is Matt Tripp, and he's had a lot of experience in the Australian wagering market. He originally founded Sportsbet, which you would probably be familiar with if you follow any kind of Australian sport. He then sold off Sportsbet to a large multinational for a healthy profit. Since then, he also started up another wagering company called BetEasy. Only in the last 12 months, he also sold out BetEasy to a large multinational corporation. He's been quoted as saying the regulatory and taxation environment in Australia makes it quite difficult to operate a wagering business. This was part of the reason why he sold BetEasy. Obviously, it's just become too difficult, in his opinion, to make money in the Australian wagering market. So the question is, if that's the case, why is he interested in purchasing TAB? Well, TAB has two distinct branches. They have their wagering branch and they also have their TattsLotto branch. Shareholders of TAB have been asking for a split between the two branches, and they've been asking for TAB to get rid of the wagering arm in favour of the better profits that come from its lotto division. Now, this is in line with Matt's previous comments saying that the wagering market in Australia is quite difficult to be profitable in. So why Matt is interested, nobody knows, but I'd like to speculate on that. I feel like Matt senses an opportunity with TAB. Investors are keen to get rid of the wagering arm. We know that the TAB is struggling to make a profit at the moment, so they're probably looking to get rid of the struggling wagering arm of the business. I feel like Matt knows this and is probably looking to purchase the wagering arm at a discount. We've seen him take two wagering companies, build them up and then sell them for a decent profit to multinational wagering companies. Could he be sensing the same opportunity here with TAB's wagering arm? It's certainly a possibility, and this is a guy who's done it before. If, along with the other private equity investors, he can get the TAB wagering arm at the right price, I think this will be his long-term strategy to build up the company and then sell it to a larger corporation. So what does this mean for TAB shareholders? Well, that really depends whether or not the entire business is sold or if it's just a sector of the business, such as the wagering arm. We know the TAB's lotto division is certainly more profitable than the wagering arm. And we also know that they issue out licenses to other listed gambling firms such as Jumbo Interactive. With control and issuing these licenses, the TAB doesn't really even need to perform any lotto service and are still able to make money through the licensing agreements. So let's look at the two scenarios. If TAB is purchased in full, what does that mean for shareholders? Well, it's likely to result in a very healthy profit depending on the price paid. If we look at a recent example of a company takeover on the ASX, we can get a better idea of what sort of returns shareholders could expect. The example that stands out for me is a company called Aconex, listed on the ASX a couple of years ago. Aconex was purchased by a massive multinational software company called Oracle. At the time of the purchase, Aconex was trading for $5.30 a share. Oracle agreed to purchase the company for $7.80 per share. That was the takeover bid from Oracle, and then shareholders vote on whether or not they will accept that offer. Obviously, that purchase price means an instant huge return for shareholders of something in the region of 30+%. That's a no-brainer, and obviously shareholders voted yes for the takeover. If a similar bid is put forward for TAB, investors can be looking at a very nice return. So that's one example, but we need to look at the other example, which I think is more likely, and that's TAB selling only one arm of the business. As discussed before, I think the private investors are looking for a discounted price on the wagering arm due to its underperformance. So what will this scenario mean for TAB shareholders? If a cash deal is done, expect the TAB to pay out a special dividend. Whilst this may still be a substantial dividend, it likely won't be the same return that a total takeover would present for shareholders. Either way, TAB manages to offload an underperforming part of the business. This leaves them with just the lotto arm, which they could then focus on growing and building a better product. If this is the case, perhaps in the future we could see a turnaround in TAB's fundamentals. Of course, that's yet to be seen, and only time will tell if they're able to turn around the company. Either way, TAB has had a bad 2020 with COVID-19 really impacting its bottom line. High competition from the other big multinational wagering companies certainly hasn't helped with their profit margins either. The saturation in the market has also limited any growth they may be able to achieve. So if you're looking at purchasing TAB in the near term, you could be looking forward to a special dividend or perhaps even a takeover bid. However, TAB has publicly stated that they are not aware of any potential takeover and certainly haven't been in any talks with private investors. So if you are seriously considering TAB, yes, you might be looking at a near-term bonus on your investment. However, considering their current fundamentals and how they've been performing over the past 5 years, personally, I don't believe they are a great long-term investment. However, that's just my opinion. As always, do your own research and make sure to consult a professional financial advisor before making any investment decisions. I'd be keen to hear your thoughts on TAB. How do you think they stack up against other ASX listed wagering companies like Jumbo Interactive and PointsBet? As I mentioned earlier, I have made a video dedicated to PointsBet, so please go and check that out if you are interested in that company. I think PointsBet represents a bit more value than TAB to investors, considering they are expanding into the US market. Obviously, the potential of the US market is huge, and I think PointsBet is well positioned to capitalize on that new market. On the other hand, you've got a company like Jumbo Interactive. Now, Jumbo offers a lotto type gambling product, but in order to sell this product in Australia, they do have to purchase licenses from the TAB. Certainly, if TAB's poor performance continues, we could expect those license pricing to go up even more, making Jumbo Interactive's prospects even worse. So ultimately, Jumbo's destiny is set by TAB and the pricing of their licenses. This is something Jumbo has no control over, and it's something that would really concern me as an investor of Jumbo. I don't currently hold a position in Jumbo or TAB, Maybe you do. Let me know in the comments. I'd love to hear your thoughts. Anyway, guys, that's all from me for this week. If you've got any questions, make sure to leave them down below. Check out the links in the descriptions. I've got my class up on Skillshare. If you want to see how I do a fundamental analysis of stocks, make sure to check that out. Until next time, guys, thanks so much for joining me. I'll see you on the next one. Cheers.